We are going to continue on with 20-1, work together. We just got done posting prepaid insurance to the RT account. So when we go back up, we see our next one is going to be depreciation expense equipment. So here's our depreciation expense equipment. Label it as an adjustment, and we're going to debit for $2,250. Okay, next we have a credit to accumulated depreciation equipment. So an adjustment, we are crediting that for $2,250. We need to find the new balance then after that. So we have two debits. That means we're going to add those two together. When we add those two together, our new balance will be $8,796.20. Next, we have a debit to interest expense. So here's our interest expense. We're going to label that as an adjustment. And we're going to debit for $277.58. We need to find our new balance. We have two debits, so we're going to add together. And our new balance is $1,370.65. Next, we have a credit to interest payable. We have a credit of $277.58. Okay, our last one then, we have a debit to unearned rent income. And we have a debit of $1,000. We need to find our new balance. We need to subtract since we have a debit and a credit. So our new balance will be $3,000 debit. Or credit, sorry, $3,000 credit. And then our last credit is to rent income for $1,000. Here's our rent income. We're going to label it as an adjustment and credit for $1,000. Okay, that should be all of them. So I'm going to say grade step 2. And next step. Okay, my next step says using the tax table shown in your text, we're going to calculate the federal income tax that is owed for the fiscal year in the tables below. So they do show us our unadjusted trial balance, our T accounts balances, and then we also have our chart of accounts. Okay, so we want to be looking at our unadjusted trial balance. What we're going to be doing is we're going to fill in these boxes here. So the first one says total of income statement accounts with credit balances, including income summary. Now, remember our income statement shows revenue minus expenses. So when we go to our trial balance here, our unadjusted trial balance, we want to find our income summary because that will be our breaking point. Okay, so here's our income summary. Notice it says total of income statement accounts with credit balances, including income summary. Okay, this is where it can be a little confusing because we have to click back and forth to be looking at our totals. So let me find my income summary. Okay, here is my income summary. So everything here and below with a credit balance is what we add together. But we have to make sure that we look at these T accounts because we haven't updated all of those accounts. Okay, so when we look at our income summary, here we see our income summary is at 12,900. So I need to update that number. So instead of using, and I hate how it goes back to the beginning, instead of using nothing, here I'm going to put in 12,900. Okay, I have a sale, so I'm going to add in that sales. That number was not updated. Same thing with purchase discount and purchases, returns, and allowances. Those numbers were not updated, so I'm just going to add those. Here, those two expenses, those are both going to be debit, so I don't have to worry about looking at those. My interest income. Now I did change my interest income, so I'm going to go back to my T accounts. Here's my interest income, and I'm going to add this number. Scroll back down to my interest income. Okay, now I need to look for my rent income. So my rent income here is listed as 1,000, so I'm going to add that. And then it looks like my last credit that I have listed is this $55 to gain on plant assets. I did not adjust that, so I'm going to just add the 55. Okay, so I should get for my balance $606,573.76. Okay, my next step to fill in then, it says less total of income statement accounts with debit balances excluding federal income tax. So again, I'm looking at my unadjusted trial balance. I need to start at my income summary and work my way down looking at those debits. I need to make sure that I add any accounts that have been changed. So I need to look at both of these. Okay, so first of all, I'm going to look at my sales discount. That was not updated, so I'm just going to take 1,010.4. Okay, same thing with sales, returns, and allowances, 4,173.60 cents. Same thing with purchases, 388,732.40 cents. Okay, advertising expense did not change. So I have 7,973.50 cents. I did not change cash short and over, so $4.58. Did not change the credit card fee, so $5,033.47. Here I need to make an adjustment, my depreciation expense equipment. So I'm going to look at my T accounts. Here's my depreciation expense equipment, so $2,250. Going back, I wish it would just bring you back to where you left off. Okay, my next one is my insurance expense. So I need to go to my T accounts for that one. My insurance expense is $3,000, so add $3,000. Going back to my unadjusted trial balance. Miscellaneous expense did not change. Payroll taxes expense, sorry. Rent expense. My rent expense did not change either. You can add repairs expense. Salaries expense. $79,482. Now, next we see supplies expense and uncollectible accounts expense. Both of those I need to go to these T account balances to figure out those. So my supplies expense is $1,150.04. My next one was uncollectible accounts expense. That is $3,675. Go back to my unadjusted trial balance. My utilities expense did not change, so I'm going to add this number, $4,330.5. Remember, don't forget this, when we look in our directions, it says exclude federal income tax. I do not add that expense number here. So I skip over that one. My interest expense, that is a number that I changed, so I need to go to my T account. My interest expense should be $1,370.65. And then my last one that I should add on is my loss on plant assets of $124. When I add that all together, I should get $530,334.24. Now, there's a lot of things that we have to add up there, so it's really important that we're being careful when we're adding, because if we get these numbers wrong, this will mean that we'll get the rest of our information wrong. So I would double check your work, add things up. I know it's kind of a pain, but I would add things up at least twice to make sure you get the correct number. Okay, so now what I'm going to do is it tells me here, I'm going to subtract these two numbers. Okay, so I should get $76,239.52. This is my net income before my federal income tax. Hey, to fill out this next part, you do need to have a book. So pause this if you don't and grab a book. Turn to page 680. This will be where you find your tax rate schedule. It's on the bottom of the page in kind of a cream colored table. Okay, you need to have that. So first thing is, it says, what is our net income before federal income tax? That is the number that we just figured out. Okay, so we're going to go ahead and put that number in, $76,239.52. Now we have to figure out what bracket it falls into. So when we are looking at page 680 in our book, we know that our number is over 75,000, but it is not over 100,000. So we're going to fall into that bracket there. So we are going to, here where it says of the amount over 75,000. Okay, so this will be the net income subject to the marginal tax rate. We're going to subtract those two numbers. Hopefully that's easy math for us. We should get $1,239.52. Okay, still looking at that tax bracket on page 680. When we look, that marginal tax rate is 34%. So that's what I'm going to put in here, 34%. So I'm going to take my amount of 1,239.52 times the tax rate of 34%. Okay, and that gives me $421, and I'm going to round up, so I should get 44 cents. Okay, now when I'm still looking at that tax bracket, my bracket minimum income tax, it says that my minimum is $13,750 plus that 34% marginal income tax, which we figured out to be $421.44. We add then those two numbers together. What we figure out for our federal income tax then is $14,171.44.